Hello there, I hope that you're doing well. Welcome to the fourth episode of the public Zeussy 2025 mentorship here on YouTube. This episode is going to be on trading in line with smart money. During this episode, I will teach you how you can recognize smart money's footprints in the markets. Smart money are the individuals that are in control of the delivery of price. I want you to understand that you and your friends that are interested in the markets have absolutely no control over why price is doing what it's doing. It's all being controlled from a higher power. And that is what I will showcase to you during this lecture. Buckle up because we're going to dive deep. Here we're on the hourly chart of NASDAQ, and what I would like you to see is that the past week NASDAQ expanded towards the upside, as you can see. What I want you to do is I want you to pause this lecture for a moment, and I would like you to try and explain to yourself why the market did what it did. I know that the majority of you would love for me to just put on my lipstick and would love for me to just walk you through it, but this is where I need you to put in some effort yourself. Pause the episode and try and break down why the market expanded higher the way it did. I hope that you paused the lecture. This is your final chance, because now I'm going to add my lipstick to the charts. Here I've added my lipstick to the charts and I've annotated key market data which I will share with you. First of all, what I want you to see is that on the left right here, you can see that we saw the market expand towards the downside. This is the sell side of the curve which was present. The sell side of the curve within a potential market maker buy model. More on that will come later. What I want you to see is that during this leg towards the downside, there was a lot of back and forth going throughout these days right here. You can see that the market was just consolidating ahead of NFP on Friday. NFP then came and NFP expanded towards the downside. So what has just occurred? What has just occurred is that retail-minded traders saw this consolidation right here, and then they saw NFP reprice lower. They saw this big dump taking place, and therefore they are viewing these highs as strong resistance, so to say. They're looking at these highs and they're thinking to themselves, all right, these highs reached a key resistance level and NFP dumped lower, so therefore we are now very bearish, right? What do? They place their stop losses above all of these highs right here. So that is engineered liquidity in the form of trendline buy-side liquidity above these highs right here. When the time is right, IPDA will seek to reprice towards these highs. What I want you to see is that this bearish fair value gap formed right here on the day of NFP, where you can see that this CB was created. This blue shaded CB right here. The market then expanded lower and a retracement occurred. At this moment in time, what I'm paying attention to is how are we going to open up for the new week. The new week opening being showcased by this orange horizontal line right here, which is being extended to the right, as you can see. At the moment that the weekly open takes place, I have two reference points. My eye is immediately drawn to where's the previous week's high and where's the previous week's low. The reason why I'm doing so is because those are my key time-based liquidity pools for the upcoming week to come. This is time cycle logic in action. And therefore, what I'm monitoring the reaction to this previous week's low. What you can see is that when we open up for the week, the market immediately expanded lower, drawing towards that previous week's low. We spent some time around that level, and then throughout the London session on Monday, the market expanded below it significantly. Notice that this very large CB right here formed. We saw a retracement taking place into that CB, and then throughout the morning session, the market began consolidating. It began going back and forth, and time distortion was taking place inside of that CB. We then saw the market displace above that CB's range, and notice that this BC formed inside of that CB's price range. Let me repeat that. Inside of this bearish fair value gap, you can see that a bullish fair value gap formed right here the moment that price repriced above it. Notice that an expansion takes place and the market is trading above the weekly open. But again, consolidation is taking place. Tuesday comes along and Tuesday drops back into that old CB's price range. But notice that the bodies keep on finding support inside of it. The wicks go below it, but notice that the bodies keep on closing inside of this range right here. That right there is already your first sign. All right, order flow might have changed. But here comes the thing. What did we have on Wednesday? On Wednesday, we had CPI. And in advance of CPI, it is never a smart idea to hold on to a one-sided idea. And that means that we're not holding on to any one-sided biases in advance of CPI. And let me explain. Events such as CPI, NFP, FOMC, they are events that can get utilized for smokescreens. And what I mean by that is the following. These events invite opportunities for manual interventions to take place, where the central banks literally go into the markets and say, all right, we now want to reprice NASDAQ to this price level. We now want to reprice Euro USD towards this price level. Or we now want to reprice GBP USD to this price level. The release of that news event is the perfect smokescreen for that to take place. And that is why you see such volatility taking place in just a matter of seconds. And that is why we do not try to stand in advance of that. Now, the reason why these events cannot be predicted is due to the fact that manual intervention can take place on these days. And therefore, we cannot predict the outcome of that manual intervention. We don't know in what range they want to reprice the markets. We don't know towards what level exactly they want to reprice for that moment in time. It becomes obvious afterwards, but in advance of the event, don't try to predict it. And what I want you to see is that the CPI release was utilized on Wednesday at 8:30 a.m. to reprice higher significantly. Notice that they repriced above the price range of this CB, which formed on the day of NFP. That right there is telling to you, all right, this CB's range will now be very important to monitor, because as long as price stays above it and we do not displace below that range, it means that the underlying order flow is bullish and we can anticipate higher prices. What do you see? This candle repriced above that CB. Next candle opens low into that range, and then the expansion higher takes place. Towards what? Towards buy-side liquidity resting above these highs right here. A retracement occurs and the market retraces back into that CB's range. What do we see? We see that the market finds support again inside that CB's range, and we then see another expansion leg higher throughout the afternoon session taking place. Why does this expansion higher throughout the afternoon session take place? Because the morning session expanded and we still had buy-side liquidity objectives to draw towards, and therefore PM continues the morning trend. That right there is a trading model in itself and a trading framework which you will learn during this Public 2025 mentorship. Now, what you can see then is that the market consolidated and we see it just go back and forth right here. Thursday opens up and Thursday initially runs higher and it comes in very close proximity to the CB which I have outlined right here. But notice that it stops right in advance of that. Instead, we see the market just go back and forth in a very slow manner and it's drawing towards the downside. What does it draw back to? It draws back towards that old CB's price range. Notice that the wick went below that CB's range, but notice that the bodies kept on closing inside of it. This wick traded into this REBC right here. IOFET, institutional order flow entry drill is taking place, where I can see that the market just steps the imbalance and then immediately leaves it. That right there shows to you that speed and velocity is on the way. Friday opens up, the final trading day of the week, and we see that on Friday we initially open low, trade back into this CB's price range, right here, random place for that row of data form, and we then begin a buy program. Notice that the market displaces higher, retraces, and then we see this large expansion taking place. What is the market drawn towards? It is drawn towards buy-side liquidity resting above this high, above the previous day high. And the reason why is because this high stopped right in advance of this early CB. Notice that the market takes out that high and it reaches this black line, which I will explain to you in a bit. A retracement takes place and IOFET is occurring again, institutional order flow entry drill, where you can see that the market traded into this REBC and then immediately began expanding towards the upside. During the previous episode of this Public 2025 mentorship, I explained to you how last week I was targeting a very specific level on the upside, and that level was reached on Monday right here. When that level was reached, the high of that week formed and we saw a sell program unfold. This week, I was targeting exactly the same array. Not the same array in terms of where it formed when it comes to price, because you can of course see that the high of week formed lower than the previous high of week, which was right here. However, the same array when it comes to what array I was targeting. And my mentorship students knew that the moment that price displaced above this CB, we were bullish on the index futures for the remainder of the week. And the potential draws on liquidity were these highs right here and this CB. But when you look closely into this CB, what you can see is that I've annotated this black line. This black line represents this old low. That old low is important because it got displaced through by the CB. Therefore, this is an imbalanced price range which has to be repriced into before the market is allowed to leave that range. And that is why it is such a strong objective. And that is why I was targeting this specific CB as my drawing liquidity. And guys, isn't it fun to see the exact high of week for 2 weeks in a row form exactly at the same array? Must be random, right? Now, what I want you to take away from what I've just broken down to you, because I've been explaining a lot already on this RE chart of NASDAQ, is that there are cycles of manipulation and distribution which are occurring. And your job is to recognize where the manipulation is taking place so that you can anticipate the distribution. This gets seen by utilizing very specific arrays that are time-based and you applying the economic calendar to navigate the order flow correctly. This is what I've taught so far within this public mentorship. And if it hasn't clicked yet, I highly suggest you to watch the previous episodes and move from there. Now, what I will do with you is I will break down the long which I took right here on Friday, targeting buy-side liquidity, which got engineered throughout this repricing lower. I utilized this REBC as my point of interest for this expansion higher. Here on the RE chart of both NASDAQ as ES on the right here. What I want you to see is that I've annotated this REBC on NASDAQ, but also on ES right here. Now, if you pay attention to NASDAQ on the left, what you can see is that NASDAQ opened low for the standard core candle and it traded back into the REBC right here. Notice that IOFED, institutional order flow entry drill, took place and the market expanded higher significantly afterwards. If you pay attention to ES on the right, however, you can see that when the standard core candle opened low, it never traded into this REBC. That right there, guys, is SMT. It's a cracking correlation between NASDAQ and ES. These markets should do exactly the same. And when they don't, at the right time and at the right price, it is a sign that a new expansion is going to take place. And that is what you can see here, where this SMT set up the next expansion leg higher for both ES as NASDAQ. Now, with that in mind, we will drop into the lower time frames. Here on the 1 minute chart of NASDAQ, and I have annotated this REBC, its high. The high of that REBC is this candle's low. I know that may sound a bit confusing for the newer students, but let me repeat. On the RE chart, I had just annotated that RE fair value gap, that bullish fair value gap. And here I have annotated this candle's low, because this candle's low is the high of that RE fair value gap. It's a tongue twister, but I hope that you understand. Now, what I want you to do is just like in the beginning of this episode, where I ask you to pause the lecture for a moment and try and break down why the market expanded higher, I want you to do the same right now. Before I explain why I took the longs where I took them, I want you to pause the recording and try to break down for yourself why I did so. Because I'm telling to you that this is exactly what's going to make you experience light bulb moments. Because if you're able to basically say, all right, he's going to mention this, he's going to mention that, and he's going to then say this and that, etc. When you're able to do that and you're able to predict what I'm going to say before I say it, it means that you're on the right level with regards to everything that I've taught so far. So please pause the lecture for a moment and then I will walk you through it. So I hope that you paused the lecture because I'm now going to continue with this breakdown. Now, before we begin with the real breakdown, I just want to share with you that on my public Telegram, I uploaded the full trade recording from A to Z. And if you want to watch that, the link to that Telegram channel is in the description of this video. Here I've added my lipstick to the charts. And what you can see is that on the left right here, we're first going to pay attention to that 930 open. Notice that pre-930, we saw an expansion higher taking place, and we reached our objectives on the upside. We then saw the market form this high, and 930 opened and immediately began dropping towards the downside. Notice that this very large CB formed right here. We see the market consolidate, and it's just going back and forth right here. What is the function of this consolidation? The function of this consolidation is to trap impatient traders into believing that the market is going to either find strong support here and now begin expanding higher, or that it's going to just continue dropping because since the 930 open, we have been so bearish, right? So what you can see is that liquidity is being engineered on both sides of the marketplace. Above these highs, buy-side liquidity is engineered, and below these relative weak lows, sell-side liquidity is being engineered. Now, what are we waiting for? We are waiting for that RE chart to trade into that REBC. Meaning, between 10 to 11, we are waiting for the market to take out this low. Notice that when 10 o'clock opened, we didn't take out that low. We instead went higher. So that right there is the engineering of even more sell-side liquidity. Then at 10:20, the market opened and immediately began dropping towards the downside. And notice that it reached this blue line right here. This blue line is the high of that REBC. Notice that in advance of that REBC, the market initially stopped. And this right here is a key algorithmic signature, where you have a point of interest and price stops right in advance of it. This right here is the engineering of sell-side liquidity. The market retraces, forms this high, and we then have this sudden drop lower. These big three down close candles form. They trade into that REBC, and notice how they immediately reject it and begin displacing higher. The moment that price traded above the open of this first down close candle in this sequence of three down close candles, it was the change in the state of delivery which was taking place, because at that moment in time, this bullish order block began getting created. Notice that a very small imbalance formed the moment that price repriced above this bullish order block. 10:30 comes along, we open low into that BC, and the market then expands towards the upside. Notice that from this moment in time, every single retracement lower was a potential buying opportunity until the drawing liquidity of this CB got reached. The reason why is because IPTA is now in a buy program. The delivery state has changed from sell program to buy program. And from that moment in time, we are looking for long opportunities. This right here was the first entry opportunity inside of this sequence of down close candles. Now, when I mention sequence of down close candles, you might be thinking to yourself, oh, so a bullish order block is just the final down close candle or the final sequence of down close candles before a reversal occurs. Nope. Stop thinking in terms of patterns, guys. There's so much more to order blocks than just it being the final down close candle before an expansion higher, or the final up close candle before an expansion lower. It's actually funny when people go online and they share, this is the definition of an order block, and they have absolutely no clue what they're speaking about. Inside of this sequence of down close candles, high frequency trading algorithms are doing a very specific thing. And that right there is something which I want you to investigate. And that is something which you will come to see over time by paying close attention to the details. Because if you would zoom into this delivery on a 15-second chart, we're now on a 1-minute chart, you will begin to see some interesting algorithmic signatures there. And therefore, a bullish order block isn't simply the final down close candle before an expansion higher. Stop listening to these guys online that have no clue what they're speaking about. After the market expanded away from this bullish order block, you can see that it repriced above this sequence of imbalances in the form of CBs on the left side of the curve right here. When price trades above these CBs on the left side of the curve, you want to see them function as support on price. And the reason why is because we can utilize these premium arrays as inverted premium arrays. So instead of using them as arrays to short off, we can use them to go long off. Notice that the market trades back above that previous day high right here. And throughout that repricing above that previous day high price level, this horizontal line, you can see that this BC forms. The market displaces below that BC. And at that moment in time, I'm typing out in my recording, I'm sorry, pattern IFVG traders, but this is not a short. The reason why I'm typing that out is because a lot of people would see this BC getting overrun and they would say, all right, it's time to go market short now inside of this bullish value gap, which is now turning into resistance. Because just like I outlined that we could utilize this premium array on the left side right here in the form of this sequence of imbalances to go long off, people also believe that they can utilize every single discount array to short off when it gets displaced through. That's not the case. Do you understand where that logic which they're applying is false and where it's wrong? They're too focused on the end. They're too focused on the entry pattern. But when you think about the overall protocol and the sequence of events that we're looking for, you understand that the entry pattern doesn't really matter. What matters is that you understand the current program that price is in. Are we in a buy or sell program? What is price drawn towards? Because when that is defined, you trade in line with that. You don't go against it. If that is in a buy program until it reaches this specific CB right here, that is the function of that CB. It's our drawing liquidity. Price is being drawn towards that level like a magnet. Therefore, I'm not looking at this as a shorting opportunity. Instead, I'm looking at it as manipulation which is taking place so that more distribution can take place afterwards. Notice that the price spent some time below that BC. We took out sell-side liquidity resting below this low right here, and that was again a buying opportunity. The market displaced above that BC again, and therefore we are now anticipating that this range is going to function as support on price. Isn't it interesting to see that a new bullish value gap formed the moment that price traded above that old bullish value gap? Random, right? Market retraces into that BC, and that's again a buying opportunity, and the market begins to slowly grind towards the upside. Notice that a new BC forms right here. Market retraces into that. That's again a potential buying opportunity because there's still enough room between this bullish value gap right here and this bearish value gap, which is our drawing liquidity. Time distortion has taken place where the market is just consolidating and then eventually the market expands into the price range of that bearish value gap, which formed right after 9:30, and that is the trade idea done. Notice that they failed to utilize this range as support on price when they closed above it, and that right there showed that the delivery which would follow would likely be rather messy. Now, what I want you to take away from this breakdown is that from the higher time frame charts, we established a higher time frame buy program, and we then waited for the lower time frames to confirm that buy program. We are trading in line with smart money. Smart money doesn't care about just what the 1 minute chart or 15-second chart is sharing with them just based upon the past 10 minutes of price action or anything like that. No, they're zoomed out. They want to participate in the moves that are anticipated based upon the higher time frame charts. Where is the session going to expand towards? Are we going to go higher? Or are we going to go lower? And when it is established, they look to trade in line with that. They don't look to trade against that. And that right there is where also the cleanest opportunities present themselves. So don't try to fight higher time frame institutional order flow. And with that being said, this episode comes to an end. I hope that you found it insightful. If you did, please let me know in the comments. And I look forward to speaking to you in the next one. Be safe.